Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Buying, selling, and adjusting inventory. Learning outcomes. In this lesson, we'll cover buying, selling, and adjusting inventory. Topics: how QuickBooks Online tracks inventory sales and purchases. Partial purchase orders. Adjusting inventory levels. Pro Advisor Challenge. Keeping the shelves stocked. The success of your clients in retail and other sectors that hold inventory depends on their ability to accurately track increases and decreases in stock levels. However, clients can get a little behind in recording their sales or may forget to take the actions needed to keep everything accurate. How can QuickBooks Online help? QuickBooks Online Plus and Advanced track the inventory quantity on hand through purchase and sales transactions. Inventory is increased when items are purchased and decreased as customers buy items. If used correctly, this gives a real-time count of what is on hand. So you need to make sure your clients understand the correct inventory workflow to follow. Clients can also use the purchase order feature to track which items are on order. Let's take a closer look at what's needed. How QuickBooks Online tracks inventory sales and purchases. Let's answer some client questions about how QuickBooks Online tracks inventory. Select the question to see the answer. What happens when clients record a purchase? Clients should use the item details grid to record the purchase of inventory items when they enter a purchase transaction, check, expense, or bill. A transaction where the client purchases inventory increases the inventory asset account, a balance sheet account, by the quantity multiplied by the cost and increases the quantity on inventory reports. You can see the effect of the purchase transaction in the transaction journal, as shown in the example below. This transaction journal has been customized to add a column for quantity and rate. The inventory will remain in this balance sheet account until it is sold. What happens when an item is sold? Clients should record the sale of inventory items, including quantity sold, on an invoice or a sales receipt. If you see multiple costs of goods sold and inventory lines for the same product, that indicates that multiple FIFO layers are involved. When an inventory sale is recorded, QuickBooks Online decreases inventory by the quantity and related cost increases cost of goods sold (COGS) by the same amount. The transaction is posted to the inventory asset account. The quantity of the product decreases in the product and services list and inventory reports. QuickBooks Online also increases the income account for the sales price and increases accounts receivable. You can see this in the transaction journal shown here. What inventory reports are available? By default, QuickBooks Online has 3 reports that track inventory. 1. The Inventory Valuation Detail Report. This shows transactions for each inventory item and how they affect quantity on hand, value, and cost. 2. The Inventory Valuation Summary Report. This shows the quantity on hand, value, and average cost for each inventory item. 3. The Physical Inventory Worksheet Report. This lists inventory items and includes a space to enter a physical count so clients can compare it to the quantity on hand in QuickBooks Online. What about the balance sheet and profit and loss reports? The balance sheet report shows the inventory asset accounts that are associated with the inventory items. You'll find these grouped under other current assets. The asset balances show the cost of the unsold inventory as of the report date. The profit and loss report reflects sales of inventory by increasing income in the sales of product income accounts and increasing the COGS accounts for the stated date range. Pro Advisor Tip: if tracking inventory is getting complicated, it might be time to look for a third-party app to help. Partial purchase orders. QuickBooks Online Plus and Advanced can track purchase orders. This is particularly helpful when your client is tracking inventory, so they can see what's in stock and what's on order. What if a client supplier runs out of stock and can only deliver part of a requested order? QuickBooks Online can receive part of an order against a purchase order and keep the order open to update as more units are delivered. To enable this, your clients first need to create a purchase order for the total amount of the order. Then, when they receive the partial shipment, they should enter a purchase transaction. Add the purchase order to the transaction. Change the quantity to what was received. When the client opens the purchase order again, they can see that QuickBooks Online added a received and closed column. The Q2Y column shows what they ordered and what they've received. The difference between those two columns is the amount of the order that's still open. Once the client fully receives a line item, QuickBooks Online marks that line closed. Clients can do the following with purchase orders. Create a posting purchase transaction such as a bill, expense, or check, and partially receive items on the purchase order. Close individual lines on a purchase order. Create multiple transactions from one purchase order. Add multiple purchase orders to one purchase transaction. Note: be sure to close any lines on the purchase order that will never be received so that the purchase order does not continue to appear on open purchase order reports. Adjusting inventory levels. Let's look at how to adjust stock levels to account for damaged or lost items, or even a mistake during a physical inventory check. There are two ways to enter an inventory adjustment. One way is to select plus new and select inventory quantity adjustment. Enter the date of the adjustment. Select cost of goods sold (COGS) as the inventory adjustment account. Select the product to be adjusted. QuickBooks Online loads the quantity on hand as of this date. Enter either a new quantity or the change in quantity. Select Save and Close. The other way to access the inventory quantity adjustment screen is through the Products and Services list. Go to the Products and Services list. Next to the product to adjust the quantity of, select Edit in the Action column, then select Adjust Quantity. This opens the same screens as before. Note that when saving the inventory adjustment, QuickBooks Online automatically creates an Inventory Shrinkage COGS account. It records the inventory adjustment to both the Inventory Asset account and the Inventory Shrinkage COGS account unless an account other than Inventory Shrinkage COGS is chosen. For a large number of inventory adjustments, adjust the quantity for multiple items on one screen. Start by opening the Products and Services list. Select the filter icon and for type, select Inventory, then select Apply. Mark the checkbox next to the products to be adjusted. Then select the Batch Actions drop-down and select Adjust Quantity. QuickBooks Online then loads all the selected items on one inventory quantity adjustment screen. Add the adjustment date and inventory adjustment account. Next, make the changes to the quantity as necessary. When done, select Save and Close. An inventory adjustment can be deleted if needed. To do this, open the chart of accounts. Next to the Inventory Asset account, select View Register. Select the inventory adjustment to be deleted and choose Delete. To confirm, select Yes. That's it. Summing up. Learning outcomes. Well done. In this lesson, we covered buying, selling, and adjusting inventory. Knowledge recap. Ensure your retail clients are familiar with how to manage their inventory as they buy and sell products. They'll thank you for it. Next steps. In the next lesson, we'll look at recording adjustments for inventory that has been donated.